Hey there, welcome to our channel. Today we're going to dive deep into the world of investing. We're going to explore the powerful reasons why you should start investing, the incredible benefits it can provide, and most importantly, how to overcome any hesitations or fears you may have about taking that first step. Investing can be a daunting prospect for a lot of people. The financial markets can seem complex and unpredictable, leaving some feeling apprehensive about putting their hard-earned money at risk. But I'm here to tell you that investing is one of the most important and rewarding financial decisions you can make. You see, investing is the key to building long-term wealth, achieving your financial goals, and securing a stable and prosperous future. Whether you're saving for retirement, a down payment on a house, your child's education, or simply wanting to grow your savings, investing provides an avenue to make your money work harder for you. The magic of investing lies in the power of compounding. Even small, regular investments can grow exponentially over time thanks to the remarkable effects of compound interest. The earlier you start investing, the more time your money has to compound and snowball into a substantial nest egg. Let me give you a real-life example to illustrate this point. Imagine two people, both 25-year-old, who each invest $300 per month. One person invests faithfully for 40 years, while the other waits until they're 35 to start investing. After 40 years, the person who started investing at 25 would have over $1 million in their account, while the person who waited until 35 would have less than half that amount, just $465,000. That's the power of time and compounding at work. Even a 10-year difference in starting can have a massive impact on the final outcome. I know what you may be thinking, that's great, but I just don't have an extra $300 per month to invest. I totally understand that concern, and I'm here to tell you that you don't need a lot of money to get started. In fact, you can begin investing with as little as $50 or $100 per month. The key is to start small and build up from there. Even small, regular investments can add up over time. Let's say you can only manage to invest $100 per month. After 30 years, with a modest 7% annual return, that would grow to over $100,000. That's enough to make a significant difference in your life, whether it's for retirement, a down payment on a home, or funding your child's education. And the beauty of investing is that there are so many different options to choose from: stocks, bonds, mutual funds, ETFs, real estate, and more, each with their own risk and return profiles. The key is to find the right mix of investments that aligns with your goals, time horizon, and risk tolerance. I know investing can feel intimidating, especially if you're new to it. The financial markets can seem complex and volatile, and it's natural to have concerns about losing your hard-earned money. But I'm here to tell you that with the right knowledge and approach, investing doesn't have to be scary. The first step is to educate yourself. There are countless resources available, from books and online tutorials to investment apps and robo-advisors that can teach you the fundamentals of investing and help you build the confidence to get started. The more you learn, the more empowered you'll feel to make informed decisions about your money. But investing isn't just about growing your wealth, it's about achieving your dreams and creating the life you want. Whether that's a comfortable retirement, sending your kids to college, or finally being able to afford that dream home, investing is the key to unlocking those possibilities. Think about your own financial goals. What do you want to achieve in the next 5, 10, or 20 years? Investing can help you get there, bit by bit, step by step. It's about taking control of your financial future and using the power of compounding to turn your dreams into reality. And let's not forget the peace of mind that comes with investing. By putting your money to work, you're taking an active role in securing your financial future, rather than just letting it sit in a low-yielding savings account. Imagine the relief of knowing you're on track to achieve your goals, rather than constantly worrying about money. Of course, investing does come with some risk, but that's where diversification and prudent risk management come into play. By spreading your investments across different asset classes and sectors, you can minimize the impact of any single investment performing poorly. And with the right strategies, you can further manage your risk and maximize your returns over the long term. Understanding the risks and rewards of investing. Investing is not without its risks. The value of your investments can go up and down, and you may get back less than you invest. This is a fundamental principle of investing, and it's crucial to understand this before you start. However, it's also important to remember that with risk comes potential reward. The potential for higher returns is the trade-off for taking on this increased risk. Over the long term, investing has been shown to provide better returns than saving alone. One of the key ways to manage risk is through diversification. This involves spreading your investments across a variety of asset classes, such as stocks, bonds, and real estate. By doing this, you can help to smooth out the ups and downs and reduce the impact of any one investment performing poorly. Another crucial aspect of investing is understanding your own risk tolerance. This is a personal assessment of how much risk you are willing to take on in pursuit of potential returns. Everyone's risk tolerance is different, and it's important to invest in a way that aligns with your own comfort level and financial goals. So, you've understood the risks, you've seen the rewards, and you're ready to start your journey. But where do you begin? The first step is to set clear, achievable investment goals. These goals should be specific, measurable, achievable, relevant, and time-bound, or SMART for short. For example, your goal could be to save $200,000 for retirement in 20 years. This goal is specific, $200,000, measurable, you can track your progress, achievable, with a disciplined saving and investing plan, relevant, it's tied to your personal financial situation, and time-bound, 20 years. Once you have your goals in place, the next step is to create an investment plan. This plan should detail how much you'll invest, how often, and in what types of investments. It should also take into account your risk tolerance and investment horizon. For example, if you're a young investor with a high risk tolerance and a long investment horizon, you might choose to invest heavily in stocks, which have the potential for high returns but also come with higher risk. On the other hand, if you're nearing retirement and have a low risk tolerance, you might choose to invest more in bonds, which offer more stable returns. Your investment plan should also include a strategy for diversification. As we discussed earlier, diversification is a key strategy for managing risk. By investing in a variety of asset classes, you can reduce the impact of any one investment performing poorly. Once your plan is in place, the next step is to take action. This might involve opening an investment account, setting up automatic contributions, and purchasing your first investments. Remember, the most important thing is to get started. Even small amounts can grow significantly over time thanks to the power of compounding. As you embark on your investment journey, it's important to keep learning and stay informed. The world of investing is constantly evolving, and the most successful investors are those who continue to educate themselves and adapt their strategies as needed. Finally, remember that investing is a long-term endeavor. While it's natural to be concerned about short-term market fluctuations, try not to let these deter you from your long-term goals. Stay the course, keep investing regularly, and over time, you're likely to see your investments grow. So, are you ready to take control of your financial future? With knowledge, planning, and a little bit of courage, you can overcome your fears and start your investing journey today. Remember, the best time to start investing was yesterday. The second best time is now. Your future self will thank you. Happy investing! That's it for now. Don't forget to subscribe and to put a like if you want to help this channel grow. Thank you for watching, and see you in the next video.